What's up, people? So, I'm going to make an attempt to try to describe this or explain it. This is more or less an experiment to see if it's even possible to explain what I'm about to explain with just audio, but we're going to try nonetheless. Now, I really just kind of want to explain some basic stuff about economics because it's relevant in everybody's lives. And right now, the Federal Reserve is about to lower interest rates, which will lead to inflation. And there's a lot of implications of that. And kind of just want to explain that. So, to begin, first we have to understand what money is. And I think people have a major misconception about what money is. And we have to go all the way back to the beginning of the economy. The beginning of the economy was basically people trading random stuff. And it probably went all the way back to like tribes who lived freaking in random jungles and, met with each other and decided to trade. Maybe one had this thing, or maybe it was just gift trading. But, eventually maybe they knew that this guy had something. It was like, hey, or maybe just somebody could create something that the other couldn't. He's like, hey, I'll trade you this if you make one of those things for me, whatever. The beginning was trading, and eventually societies grew up into kind of homesteads where people kind of specialized in certain things. Like if it was a family, everybody in the family had different jobs, and maybe somebody could sew, or maybe somebody could, do some metalworking, whatever, and they started specializing in certain things, and that's where people's last names came from. And slowly but surely, a diverse economy started to grow. And it might have just been bartering, trading. I don't even like the word bartering. I think it's a unnecessary word. I just call it trading. Okay, so people were trading maybe one good for another, and eventually money came into play. And money was more or less something that was just universally valuable. And it could have been anything. It could have been, you know, gems, diamonds, rocks, could have been rice. It could have been, it could have been pretty much anything. Anything that was that was universally valuable because, maybe you had something that the person who you wanted to trade with didn't want, so you needed something that he did want. So you would go to that thing that was valuable to everybody and trade with somebody who did want what you had, and then take that thing and bring it to the guy because he would of course accept that because it was valued by everybody, and he could take it then and trade it to somebody else, and so on and so forth. And that's really what money is. It's just a thing that is valuable within a group of people. That's all it is. It can be literally anything. Now there's obvious qualities that you want it to have. Like I said, it could be rice or something, but I mean, you wouldn't want it to be something stupid that people could just like go pick up off the side of the road, like rocks or dirt or something stupid. It should be something. I mean, it doesn't matter what it is. It really does not, because at the end of the day, everything in the economy is just trading. It does not matter what people are trading. It's all just trading. The only reason money exists is because you might have something that the person who has what you want might not want themselves. So you have to get something that he wants. So you have to trade what you have to somebody who wants it and get something that he wants. So money is just like this thing that makes that process easier. It can literally be anything. Right now, people are trading pieces of paper before they're trading gold. Actually, people right now are just keeping track of digits on computers. It doesn't even exist. It's literally just accounting on computers. And so as you can see, money doesn't have to be anything as long as it's really, actually, I would say that our monetary system we have today with the accounting on computers is kind of dumb, because that really is nothing. It's like literally nothing. And I think money, paper money, I think that's dumb too, because it's literally nothing. It's just paper. Gold was actually a substance, which was cool. silver, other stuff, copper, maybe if it was rice or something else. It was actually something that was useful in one way or another, tangible. When you're working with paper, it's just paper. It's useless, totally. When you're working with numbers on a computer, it's useless. It doesn't even exist. You know what I mean? Break the server, all, transactions are messed up and everything's, whatever. It's just dumb to me. Preferably, I really don't have a high net worth right now, but if and when I do, I want to have a high net worth that's kept in tangible assets. I don't want really anything to do with, intangible assets, and I'll use those, and that's something I might explain a little bit, but I really don't want to hold on to them because at the end of the day, they're really nothing. They don't even exist, but they can be useful, and if you know how to trade, if you know what, how certain things work with the economy. But anyway, money is nothing today. It's basically paper and random numbers on accounts. It literally is. That's literally all it is. We used to have a gold standard for the dollar, and they said it was backed by gold, but that was questionable. But they took us off that in like the 70s. That was before I was even born. And it's literally just paper now. It's like they'll tell you straight up it's fiat. Whatever words they want to use, it doesn't matter. It's literally just paper. Okay, so again, just to keep it in your brain, the only purpose of money is to facilitate, to make transactions easier, to make, so the guy who has what you want can actually get something he wants instead of trading you for what you have, which might be something he doesn't want. If you trade what you have for money or whatever good it is that people are, universally accepting, then you could take that good and trade it to the guy who has what you want, and then he could take that same good that you just gave him, whatever it is, money, rice, beans, freaking rocks, seashells, gold, silver, doesn't matter. He can take it to whoever else in that group of people is willing to trade their stuff for it, which, like I said, within a group of people, they all accept something as money, and it's only universally accepted within that group. But he can take that to anybody in that group and trade it for something that they have, because they also accept money. And within that whole, field of, transactions, there's different, values of goods. You trade a pound of, I don't know, you could just kind of see what I'm saying here. There's with every transaction, that takes place, there's like kind of an implied value based on how much of whatever good is being used as money is traded for it. You know what I mean? And we could call that price. That's the modern term for it. But really, it's just whatever people are willing to trade and whatever deals they make. Price can change day to day, deal to deal, just depending on what people are willing to trade. And that's what people might call supply and demand. But it's really just, how much, those supply and demand implies certain factors of, how much the demand side, wants something and other stuff like that. But really it's just what deal are people going to make. And I mean, if a person really wants something, they'll probably pay more for it. If there's a low supply of it, if there's scarcity, they'll probably pay even more. If there's a lot of people that want it, if it's high demand, a lot of people will be competing by making offers for it, so they'll be eventually bidding up the price more and more, offering more and more whatever good it is that's being used as money for it. And those are very basic functions of supply and demand, as modern economists want to call it. I mean, you can see how it works. It's just simple understanding of how it works. And I mean, that's really, if you want to be honest, that's economics in a nutshell. Now, a thing that's not really mentioned is the supply of money, and how it's just another good, and there's a demand for it, and there's a supply of it, and it has a value based on supply and demand, just like any other good in the economy has. There's usually a high demand for money because people want to use it for their transactions, and depending on what the supply is, it's going to affect its value. And that's really what inflation is. Inflation is, you inflate the economy with a huge supply of it, it loses value. And if the demand stays relatively the same, yeah, it's going to lose value. If you decrease the supply and somehow the demand for it increases, it's going to increase in value. That's how all goods in the economy work, including money. It's no different. It's just another good. It's just a thing that you could trade what you have for to trade it to somebody else, so they can take it and trade it to somebody else who's also willing to accept whatever that good is that they consider money. And that's how money works. That's all it is. It's that simple. And it's crazy because modern economists want to complicate it like crazy, and I think that's to hide, certain almost criminal activity that they're doing. It's really super simple. And if you look how money's created today, through fractional reserve banking, that's basically fraud. If you go back to the history and how we got from gold being money to then banknotes to then fiat, I guess just paper, it's a very schemy. It's very it's not honest. It's very, very schemy, and I would borderline call it fraud. And basically, it's dishonest. That's what I'll say. And you go beyond that. There's different monies in different places, and that's the thing. If people are trading their goods for a tangible asset and using that as money, it's kind of going to be a more natural function to the economy. There's going to be a relatively stable value probably of that money. The only way it could be manipulated is if somehow people get their hands on a huge supply of it and can basically create a false scarcity. You know what I mean? And that's kind of already happened with gold. I think gold has more or less been consolidated, so I don't even think that's a good money to go to. But yeah, if you if you have a major chunk of the supply, you can manipulate the supply and then affect its value. And there's a lot of things you can do with that. And I don't even feel like explaining that right now. But yeah, if people use something that's tangible as money, it functions a lot more naturally. With fractional reserve banking, somebody can go to a bank and the bank can just create money right there. You can't do that with gold. You can't just create gold. You know what I mean? So, constantly the supply of money is fluctuating, and that's based on interest rates, which the central bank sets, which trickles down into the economy through, because banks, I don't know, it's too complicated to even explain right now, but interest rates are going to determine basically how much money is being created, because people will borrow more when the interest rates are low and more money will be created. And so there's constantly a fluctuation in the money supply, and that's only because the type of money we're using today can just be click created on a computer real quick, and that's totally unnatural, and it's led to a whole bunch of crazy stuff that's unnatural. Actually, most of the wealth in the world has been consolidated because certain people were able to get their hands on a bunch of money because banks were creating it real quick, and then they were able to go take that money and buy up big old chunks of the economy. And that's not natural. That's not natural at all. And so when people want to talk about capitalism and then saying look at all these rich people have everything, and then they want to say stuff like, oh well, that's what hard work gets you, that is not at all how it happened, dude. These people got their hands on money that banks created out of thin air, literally, or whatever you want to call it, just click, create it on a computer. That's how it works today. If you know somebody that owns a bank, if you have bad credit, they could probably create $1 billion real quick for you, like real quick. And the only liability that banks have is they have to balance the books. But if you know, go and borrow that money, if the bank creates it real quick for you and hands it to you, and you buy real tangible assets, maybe appreciating assets, you can then, depends how long you want to hold that loan, you can make payments on it. If somehow it's a profitable asset, maybe you buy a business and it's profitable, so you make enough money per month to pay the interest on the loan, whatever. But also, if you buy an appreciating asset, you can just resell it a little bit down the line and make a profit, and then pay back the loan. And I mean, there's all that. If you know what you're doing, you know you can make a lot of money. But the thing is, it's not natural for money to just be created real quick, you know, from banks. That's totally unnatural. That's, like I said, I would call it fraud. And a lot of people, a lot of economists these days want to say, oh, well, what would money be? Da da da. Well, y'all are, look, I'll say it straightforward. I think they're either like paid to say stupid stuff like that, or they are just so lost in all the modern economic understanding that they really just don't understand like how an economy can function in a very natural and simple way. It's like, y'all are, I think they're paid. I think most of the people who defend the current system we have are like literally paid to push stupid ideas. I sincerely think that. And I don't know that, but you know, I don't know. I'm suspect. So with that being said, man, I mean, you got to understand, I mean, a lot of modern economists, they might say, well, if banks can't create money, then where are people going to get money for loans to create businesses and stuff? You get it from people who have it. Okay, a bank creating money is not natural ever. It never will be. That's fraud. I don't know what else to tell you. If somebody's just creating money right off the bat, it's click, 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 creating on a computer or printing it out, that is fraud. That's not natural. That's what's messed up in the economy right now. And if you want to borrow money, you find somebody who already has it. If we're using gold as money, you find people who have gold, okay? Or if, I mean, it depends what you're trying to do. But I was gonna say, if you want to start a business, just, you know, do what you got to do. I guess you might need money here or there to buy certain things, and it is what it is. But who says that's even, you know, a mandatory thing? You know what I mean? I mean, you know, ideally, it's not even ideally. I mean, it's more or less a privilege if somebody's willing to hand you their money. It's like they're willing to take a risk on you. You know what I mean? And maybe, I mean, I'm cool with like there being like some like contract law where like, you know, if you don't pay this back, then, you know, he's going to take your ass. That's what they do with banks. They say, you know, here, we're going to create this loan for you. If you don't pay us back, we're going to seize your property. And so I'm cool with that. But I'm not cool with the banks click, 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 creating some money right there, you know, on the spot. You know, like I said, if we're using gold, then people who have gold could write those type of contracts to kind of protect their assets. You know what I mean? So if you don't give me my gold back, I'm going to take this, this, and this, which you have, and write that in contract. Very simple. And, you know, it just is what it is. And you can charge them interest, just like banks do for the loans that they create. Click, click, click on the computer. You know what I mean? And so there's something in it for you as a person who's willing to, you know, put up your money, you know, as a loan. It's very simple. I mean, it's just so stupid that some modern economists want to be like, where are people going to get loans? You get loans from people who have money. That's common sense. It's so stupid that people think, I mean, I literally think the people who try to push, you know, stupid ideas like that are literally like paid to push that type of stuff. I sincerely do, like I said. But I don't know, man. Hopefully that's a good overview. I could probably go into other details, but I don't think I need to right now. I think that's just a general overview that I think people need to know. And I'm just trying to think if there's anything I want to stick at the end of this. I think it's pretty straightforward, man. And like I said, this was kind of an experiment to see, what I could really do with this. I don't know. Like, let me know if y'all really just, sunk in, or if you didn't understand or what. You might just have to listen to it a couple times or something. But hopefully the message is loud and clear. Banks creating money is stupid. Money is really just a good that a group of people agree to use as money. And there can be all types of different money. There is there's different types of money all around the world. I think it's actually stupid that people use bank created money, because these banks are creating it right there, manipulating the supply, and its value's going up and down. And it's like, dude, I would not use that. I would definitely not hold on to it as an asset, because your asset is, if it's, I don't know, it depends what it is, but value could be just going up and down. That is not a good idea, to be holding on to assets that are fluctuating in value. You want to be holding on to hopefully appreciating assets, or just at least stable assets. If you're holding on to money that's losing value because banks are click creating it, daily, and increasing its supply, that's like just pure stupidity. You know what I mean? You're holding on to an asset that's losing value. That's just dumb. And that's why I say I'd rather tangible assets, because you'll at least be getting use out of them, maybe. Like, well, first you would probably, like I said, you're hopefully holding on to either money-making assets, like you have a business or something, or at least an appreciating asset that's going up in value. There's different factors that affect that, but if you're holding on to tangible assets, then at least you could be getting some use out of them. You know what I mean? Like, if you're holding on to, if you own a house, you're living in the house. If you, if you own a business, that's a money-making asset, and it's, that's cool in itself. To me personally, that's what I like, is businesses. Those are money-making assets. You can build the business and then sell it and like make a huge profit. You know what I mean? But whatever it is you're holding on to, like your net worth is made up of, I sincerely hope it's appreciating in value. And that's the thing, like when it breaks down, only certain things in the economy are going to have value because they're useful. Like a house has value because people want to live in it. A business that makes a certain good is valuable because people want to buy what it produces. You know what I mean? Those are really the only things that have value in the economy. Everything else is just like numbers and weird schemy trades and stuff. And when it breaks down to it, the only things in the economy that have value are the things that are actually useful. That's just what it is. And but like I said, I will use money because it is you can do certain trades and make profits here and there. You can do stuff. You can do all types of stuff if you know how these numbers work. But generally speaking, if you want to break down to the basics, that's what it is, man. Money is just a good that a group of people agree to use to make their trades easier. That's simple, There's different monies all over the world. You can literally, like, use anything as money. Like, if you and a group of friends, I've used this example 100 times. It's one of my favorite examples because it reminds me of when I was a child. But if you and a group of friends all like Pokemon cards, and you want to trade your skateboard for your friend's bike, but he doesn't want your skateboard, you might say, hey, do you want this Pokemon card? He might be like, okay, trade me that Pokemon card, this Pokemon card, and that Pokemon card. And then he might take that Pokemon card, and he wants something from somebody else, and that other somebody likes Pokemon cards, so he says, hey, I'll trade you these Pokemon cards. If all of your group of friends agree that Pokemon cards have value, then y'all can use that as money within your group of friends to trade your goods and maybe even services. Say, hey, y'all, freaking mow your yard for that Pokemon card. You know what I'm saying? And that's literally how the economy works. It's just a group of people agreeing that something has value. I mean, you just have to understand that money is only universally accepted within a group of people, and it's generally, there's certain increments, and it's easy to use to facilitate trades, and you can't. I mean, hopefully, it's not something that can just be, created, and which will increase its supply and mess up the value of it. But it's real simple stuff. Hopefully, I'm not confusing you right here. And like I said, this was an experiment. See how well this gets through to people. We'll see. I'll post it. See what people think. Leave some comments. Let me know. Hopefully, it's helpful. With that being said, I guess I'm gonna leave it at that. And if this format works, man, I guess I'm gonna keep it up. So let me know. And if this is good enough, man, let other people know too. With that being said, I'm gonna leave it at that. And I thank you guys for listening. I'm out.